is what it is. And the bear euphoria season is here, man. Holy shit, you can hear him from... I can hear the bear that's in that building across the street right now. That bear is going absolutely nuts across the street. I can hear him over there right now. He is euphoric as hell, right? He's euphoric as hell. I think even Jimmy is a bear right now. What's going on, guys? It's Jimmy with the $500 stimmy. Guys, guess what? I have turned into a bear. I've been in the psych ward for about a year now, and I think I want to be a bear now. I think I want to be a bear. This is the perfect time for a bear. Everyone is bad now. Strap up. We're going to hell. Tino's right. AK is coming. AK is coming, guys. Strap on. We're going to hell. Everyone's turned into a bear. Holy shit. Look at this poll right here. What comes first for Bitcoin? 21K or 23K? 71% of people saying 21K. That is absolutely absurd number for the bears there. But hey, the majority may be right this time. Well, we shall see. But anyways, guys, looks like Bitcoin did play out this bear flag that was on the 4-hour time frame. It was that higher high, higher low structure, right? That did give you the measure move right back down here to this 21,400 zone, which is a pretty big level, right? This level is pretty damn big. We're slowly making our way back down there, making our way back downtown. But that is the measure move of this bear flag. You do also have the 786 Fibonacci from this low, right, to this high. That's also coming in right there. And you've got, this previous peak coming in right here from the FTX crash. So this is a important level, guys. Like, we want to hold this level. And if we don't, well, we'll talk about our Wyckoff schematic number 2, which we'll talk about coming up here shortly. Cody said, what was the announcement? Cody, I'll do the announcement for you again soon, man. I will definitely do that. But looks like a little bit of the bearish move to the downside definitely did play out, and we're slowly coming up to that 21.3 level, like I said, that I've been waiting for so long for this damn level, and we might be getting it. Let's go. Zero said, this is exciting. Bro, I'm pumped that we're at least getting some price action. Where we got? Johnny Wishbone said a couple hundred, I'm ready to buy. LA Ray said, stop spamming. Let's see. Fallen said 500 billion liquidity to grab down. What's going on, Chumper? We got Adam said, only OGs left. Who else we got here? We got a new bear season is here. Let's freaking go, man. Pump tomorrow, said Wes. You never know, man. You never know. I bet there's a lot of shorts coming in right now as we get to this $21,300 zone. And usually know what happens after that point. Who else we got in here? Jimmy fresh out the psych board, man. He's turned into a bear now. YJT said Bitcoin, all right, the alts are looking like total crap. Yes, this is why I always say, guys, alts are good when you are feeling super confident in Bitcoin. As soon as you are at that, like a huge resistance or a point where you're like, okay, Bitcoin could get a pullback, altcoins, Bitcoin, think about this right now. Bitcoin's only down 1% today. ETH is down less than Bitcoin. This is why Bitcoin and ETH are king, bro. Bitcoin and ETH are king. All right, I'm going to continue to say it. Bitcoin, ETH are king. And altcoins down, I mean, you had altcoins down 15, 12, 13, 10% today on a 1% drop on Bitcoin. You know what I'm saying? Like, so altcoins, I say, you got to be in and out of altcoins, right? Don't be afraid to take profits on altcoins when you're at resistance levels, right? And for the same point, when you're at support levels, sometimes altcoins can be better to play when you're at support. Anyways, let's look at what we got. So we're looking back over here, 21,400 is that level I'm looking for. Will we get there, or did I get front run at 21,500? We will definitely play that out as we kind of get along here. But man, I will say, the bear crowd is loud. And why is the bear crowd loud? Well, it's because Powell spoke the last 2 days, and Powell sounded a little bit bearish, right? He sounded a little bit bearish. Why did he sound bearish? Just because the last, CPIs came in high, and PMIs, blah, 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 blah. They all came in high, right? And I will say this, for the next week, until the CPI next week, I think we're just going to chop, right? I really don't think we're going to see like 20K, 19K until you see that CPI next week. When that CPI comes in next week, next Tuesday, that's when you should expect I think the real big volatility that could push you back below this low. And the popular, you guys can see, like, everyone's expecting a 50 basis point rate hike now. Can it happen? Yes. But if the CPI on next Tuesday comes out good, bro, I think a lot of the selling will get pushed back to the upside. For now, we just have to kind of wait, though. We just have to kind of wait. Psycho Pro said, Ripperoni, bro, Ripperoni. Rip a freaking Roni. All right, so let's see what Bitcoin closed at. So Bitcoin closed actually below the 200-day EMA. So that was coming in right here at a measly 21,784. We did close below that. We also did close below this upward sloping trend line on the daily time frame. So what do we got now, right? We got this $21,300 level. We got 20,300. Funny enough, right? Everything is 3 here. 21,300, 20,300. And then we got the big old golden pocket, which has been like my ultra bear euphoria level, right? Where if the bears get super euphoric, right? The bears be screaming from the rooftops. Hold on, let me get him back in here. Giant, we're screwed. We are absolutely screwed. All right? Let me tell you this right now. Come here. All you little young felons in the chat. All right? CPI next week will be bearish. Bitcoin is looking very weak right now. You need to sell at the low. Sell right now. You could have sold at 25K, but sell now. It's a great time to do it. All right? Everyone in here, bearish right now, is probably bullish at 25K. Now you're bearish. Here's the deal. All right? Here's the deal. We're going much lower. Like, I'm telling you right now, we are probably seeing fresh new lows by the end of March. 14K by the end of March. It's coming. All right? Gear up for it. The biggest crash in stock market history is coming in March. Strap up. We're going to hell. All right? Just like Jimmy said. But no, in all seriousness, guys. Right, the white off that I've been talking about, right? I know everyone will laugh at this now, right? Price is coming down. Ha ha ha. Look at Jordan. Price is coming down. This is all a part of the plan. This is all a part of the plan, right? We had 2 plans here. We had Wyckoff schematic 1, Wyckoff schematic 2. We're sitting right on top of Wyckoff schematic 1 support. So if this breaks, we're likely going to go into Wyckoff schematic 2, which I've been looking at as more of that long, drawn out, boring period where Bitcoin stays down in this range for an extended period of time and gets everyone super bored, right? Sentiment down here will be absolute dog shit. And we just kind of straddle the fence in there, right? That's always been option number 2. I will say though, like, I know the popular consensus is, CPI is going to come in bearish next week. It's going to dump us lower. Powell's going to do 50 basis points. It's going to dump us lower. That's now the consensus, right? If you actually, I don't have the stats up here, but I think people are pricing in, the market's pricing in an 80% chance that the Fed does a 50 basis point rate hike at the next meeting. Like, well, what does everyone think about that? What does everyone think? I know the bears are going to say, yeah, it's going to be 50. And all the bulls are going to say, no, it's going to be 25. Let me ask you in the chat. Let me ask you 2 things. Answer this for me in the chat. Do you think that CPI is going to come in good or bad next week? And do you think that it's going to be a 25 or 50 basis point hike coming up later this month? Let me know. Let me know what you guys think. Because we're all guessing at the end of the day, right? It's all a fun guess, right? We all have fun in here. We all kind of do our little old thing, but. Let's see where we're at for now for BTC. Let's see where we're at for our indicators. So, man, let's see. So daily's coming down. I will say I don't like the fact that we broke this upward sloping trend line, and I also don't like the fact that we broke the 200-day EMA. Usually, not the greatest 2 signs. I will continue to say though, it's like man, the market is just pushing this price down hot and heavy. I will say this. Daily stocks are bottomed out, right? 2-day stocks.
Looks like we might have.
Stocks are bottomed out. Man, but the market, it just wanted to continue to push this.
Oh, there we go. A little reverb in there. Looks like we might have popped into this first trade a little early. You're listening to Jordan Camarand.
A little bit of a relief bounce.
or cryptos, not bad guy, but
if we get it, we get it.
our first trade was solid.
70-80%
Here to here.
That they were just that last week. You know what I'm saying? Like
A little bit higher. Here to here. What am I saying?
That's kind of been
Boom, boom.
my narrative where if Bitcoin's gonna come all the way back down here, man, you're gonna get some
it's a nice
discounts on some altcoins.
2.7, 275 divided by 2, so
$18,200 level. My question is like
$137, probably about 130 to a little bit more. Looks like probably gonna lose that on this trade. Hopefully it breaks. Maybe I might push my stop loss down a little lower and possibly risk it. It's slightly below where the recent lows are. We're gonna do a little Fibonacci right now, and
I keep saying this $20,300 zone. I think a lot of people are looking at it. I think
check this out. See where these levels are.
Could you see one of this? You come down to this 21.3 level, right? And then you get a bounce back up. Kind of like test this area here.
Taking a look at a few things.
Area back up here, and then you see that move down, and you kind of make that little left shoulder head.
All right, so
as sort of that super
got the Fibonacci. I'm gonna go pull from high low. I use wicks. I'm don't use wicks. I use wicks. I'm day trading. I don't want to see where the body's going. I want to see where it can go. I want to look at its capability.
20,300 at that point, right?
All right. So it's right.
That's kind of my thought process. Are we really just gonna dump straight down like this?
Yeah, be a halfway. All right. It's literally right below the halfway mark. I feel that's going to be good. Going up to the top of this golden pocket, that's a possibility. We're going to go take in a little more TA on
50. We got 25. We got
some other.
Let's see. John said
use a little bit more TA to get this thing rounded out. See if this long is going to hold or dip.
That's what the market's doing right now. The market
drop this off of here.
Basis points, right? So the price is obviously going to come down because the market's baking that shit in, right? And then what imagine the smell.
The SP 500. I love the.
And the price is 25 instead of 50. Imagine the smell. It would smell like some bear guts.
The MACD is great for the S&P 500. One of the best tools.
Out in this bitch, right?
Put it on the 5 minute. 5 minute adheres extremely well. This cross right here.
Oh, Powell's gonna do 50. It's over, man.
For short-term trading.
Over, bro. Oh wait, the CPI is good.
I think I'm gonna move my stop loss down slightly. Just
I've been bullish this whole time.
In case I think we might take this, so I'm gonna do this.
It would smell probably like a little bit like shit.
I'm gonna move down slightly.
I'm pretty sure bears fart a lot. I think
barely even noticed it. Okay, good.
What animal do you think farts more, a bear or a bull? I don't know.
So this cross right here that you can see.
But yeah, I mean, my same thought process
hasn't really fully happened yet, but solid. This cross right here would be good. This is the RSI within Bollinger Bands, and what it crosses these other moving average lines with it, like average, moving average in the center line. It's quite a bullish signal. If you have any questions or anything, put your assets in the chat, please. We'll go hit those next. But I'm thinking I'm going to hold on to this. The probability is going up looks decent.
Same thing. You're coming down. Yes, it's cool. It's great.
Nothing too overrun on the 3 minute. We go to the 10 minute. These are scalps we're doing. We are doing short-term trading. Look at that. I like the way this is forming. This, dang it. If this closes like this right now or better, I'll be happy. A little bit bounce right here that caused that. So maybe we can get, I just want this to get to this yellow line right here. If that gets this yellow line, we're good. I'm going to chill here for about a minute and 30 seconds. Well, I'm going to look at the 15 minute, then I'm going to come back. Okay. Nothing overdrawn on the, not overrun on the 15 minute. We're going to head back here. Let's see. We're going to see how this holds. Oh, yeah, do it. Now that's what I want to see. Look at that. Spectacular.
69K by March.
I'm going to set these limit stop losses to right above my entry at 88.50. The
shout out to Alpy, man. Alpy, if you're out there,
current entry is at 88.25. This will light up when it's ready. I like the way the indicators are showing right now. Oh, look at this. Look at you. Spectacular. Okay. Oh, baby. This is cross right here is a personal cross that we use.
Especially the ones that like just like constantly post P&Ls. It's like, yeah, man, look at me. But anyways, let's come over here. So yeah, man.
All right, look at that. We are back on, children. All right. Actually, I mean, this thing might run on up to even higher. It could hit the golden pocket, but I don't know. S&P 500 this time of the day likes to move in waves. Waves is generally the way things go. We are in this long. We can take a quick look on over to Bitcoin for a second. We had a long at 21,725. It's currently 21,767. I like it. There's not much not to like from this position. It's these momentums right here. It's going to run up. I'm going to hold it until this thing reaches this line right here. This is market cipher. It's a very good method to find out if your product is or whatever your asset is overheated. So you take a look at the 1 hour. You could even run up to this 20 right here. Might be logical, but
this is based off history, guys. When you get back,
that little green dot right there, positive sign for market cipher. We'd like this just to improve a little bit. Let me go down to 25 minutes, see what's going on.
Zoom in like this. Let me go. What am I doing?
This baby closes like this or better.
What's going on, man? Why is the log scale on?
I would say hop in. I mean, unless it does something crazy and it jumps up insanely in between then.
Every time you do this in the past, it's always scary.
We're good. You look golden. All right. I would enter again.
We're going back to 12K. Recession's coming, even
I like it. You were thinking to enter, I would maybe wait until.
Who thinks in here that a recession is coming in?
What are we just looking at? The 10 minute? No, the 10 minutes on the other one.
If there's more than 50 people raising their hand in the chat, that probably means it's not going to happen.
I'm losing my mind. Oh, there it is. 25-minute candle closes like this or better in these 3.5 minutes.
But no.
Let's say about, let's say 21,780, right around, or 770. It's 66 right now. 21,770 in about 3.5 minutes, and you are going to have something that I think you can pop into again.
Anywhere above, like,
I
would prefer 18,500. Anywhere above 18,500 is where I would look.
This is gonna do a little Mitch Ray earlier.
Higher low, right? I'm just looking for any type of higher low. That's it. Let's not make this difficult.
Oh,
right?
Here we go. You gotta rock and roll, everybody.
A move all the way back down here, honestly. Right? Wouldn't really.
Damn, let's get going. See what's going on here.
Just looking for
cool. Cool. Look at that. Getting a little positive motion.
Right? That's it. And I know you're gonna hear.
Got to take the clock and everything off. Look at me being an amateur.
Right? 10K, 12K. Binance is going under, even though they just got approved by the SEC to buy a $1.2 billion company. Tell me how that makes sense. You don't think they did the due diligence to see that Binance actually?
We might have a slight retracement. I don't think a lot. I just only think a few dozen points, maybe. I think it's going to stick right here. We're going to be watching this baby. We have about 2 minutes left.
Back down to this region, which we've been talking
I would like it to close at about the same level here
back down to 18,800
in 2 minutes. That would be nice. If not, and it just stays right here. Nothing really wrong with that.
And it's all this big old golden pocket zone right in this zone, which is a certainly possibility. Will we get down there? I have no clue, right? I don't think anyone does. It all depends on what happens with the CPI and the FOMC meeting coming up in the next 2 weeks. But we will be here to watch that shit, and we will be ready to rock and roll. All right, we'll be ready to rock and roll. Right now, in the meantime, you're going to have everyone fighting.
All right, we're getting positive juice on the S&P. Looks like we're going to have another positive trade, hopefully, if we can get this in.
Right? You're going to have both sides fighting.
Where did that just go? Did I not just have the...
Vikings. Bear Vikings. How much longer do we have to be at war?
Taking a look.
This is ridiculous.
Look at this.
We've been at war for 15 months now. We've lost every battle, but we will not lose the war. If you are still a Viking out there with me,
interesting. There we go.
spam the sword and shields.
It lines up with the peak of everything. How about that? Splendid. No more of this. And we are locked in, everybody. Bam. You cannot lose this trade now. Life is good. We're going to go... let's see here. Let's see here. Now going to move on over to the SP500, or I mean Bitcoin possibly. Get this ready just in case it breaches that point. Oh, we might actually stay here for a little bit. Trade's getting a little juicy. I like it.
Washington, D.C. lizard people. We could. Let's just take over Washington, D.C.
There we go. There we go. We already have a little bit over $130 in change with our positive first sale. I can make a little bit over 200 after fees. It'd be nice for 2 trades. And take that. Probably be able to get a couple more trades in the day. Push it over 300. Anytime I make over $300, that's a decent day in America.
Go across the altcoin market, guys. Like some of the ones that were hot, like GRT, down 50% from the highs. The hot ones, bro. ACH. Now back at the golden pocket, by the way. Oh, getting there. Down 50%, right? FET. Another hot one. You know, almost down 50%.
All right. Let's see.
Gala, which was a hot one. Gala, down 50%. FTM, right? All the ones that were really running hot have all dropped 50% to the downside, right? And this is why I remain to say, guys, like, I know everyone doesn't like holding Bitcoin and ETH because they don't move, right? They're stable. But in the beginning phase of a market turn, right?
Order executed. Let's hit our stop. Darn. I liked a little bit more out of this, but can you say?
Lemon water, lifer, nice, bro. Nice, man. Nice, man. I do like lemon, by the way. I like putting lemon in on my chicken, right? My mom used to do that for me when I was a kid.
No, he's get back in. Nothing wrong with that. Let's see. Now we're going to go back to
sounds plain, guys, but if you never
here. We are going to bam, pop the silver. I like.
Cook it and you squeeze some lemon on it. That's it. And you just eat it like that. It is actually really freaking good. It's really freaking good, man. It's really freaking good. But, you look up here and Bitcoin from the highs is down about 13%, while altcoins are down 50%. And that's why I always say, guys, Bitcoin, and look at ETH. ETH is actually holding up better than Bitcoin. I know everyone's like, ETH. ETH is only down 11% from the highs. Bitcoin's down 13, and all the other alts are down 50. What I'll say is this, man. Bitcoin and ETH are king. Especially during the beginning phase of a market turn, right? Bitcoin and ETH always run up well during the beginning phase of the market. Bitcoin came up about 62% here. There's a lot of high altcoins that didn't even go up 62%. Bitcoin outpaced them. And
all right, everybody, if you like, please like and subscribe. We're sitting here trying to make money fast and easy. So if you like that, you can always comment or put a comment down below, leave a message, and we will get to whatever asset you need. Might have to sign off in a little bit, going to go on break, and yeah, leave you with some Jordan Camarand and stuff going on.
Could we see a little bit of one of these little swing failure patterns where we break this low, right, and we come back up and we get a little swing failure? We might actually have, we don't have any 4-hour bullish divergence. The 1 hour, you do, but you got to break it back above this high to even look at this, right? You got a little bit of lower lows, right? You got 1, 2, 3 lows, and you got 1, 2, 3 higher lows coming in over here on Market Cypher. So you do have a little bit of bullish div on the 1 hour time frame, but I want to see that like close back above 21,800 to say, man, we got a little swing failure. Is this it? Or are we still going back down to this $21,300 level, which is a major support level, and the measure move from this bear flag. So that's what we got right now, man. That's what we're kind of watching here. And we shall continue to watch this as the bear euphoria is high right now. I can hear it. Like I said, guys, I think all of New York over here, I can hear just the bears outside moaning, bro. They're just outside looking for bulls to eat, right? Let me see. I think I actually might see one in the hallway. Oh shit! Here, let me take my camera out there. I think I might see one in the hallway here. Oh my God. Wait. Is that a... Oh, shit. Hold on. Is that... Oh, they don't have a bear, man. It's ruining my joke. Come on, man. They don't have a bear on here. God damn. But they do have a horse. They do have a horse, bro. They do have a horse. You know what I'm saying? Wayne said they can eat me. Nice, bro. They can eat me. They can eat you. They can eat me. I'll keep saying though, like you still got the daily stock hour silence bottomed out. It's 2-day, 3-day, all bottomed out. We've been saying that since since the 7th of March. Eventually, this is gonna play out for some type of bounce. It's just a matter of when is it going to play out. It's going to play out from this 21.3 level. Are we going to see a little bit lower to 20,380 first and then see a little bit of a bounce? I think to me what makes the most sense, actually, even for both sides, is you just kind of chop here until the CPI, until Tuesday. This has kind of been my thought process. We talked a little bit about this yesterday, right? You kind of just chop in this regular zone, right, until the CPI, which is next Tuesday. Depending on the news, right? CPI, and you either form some type of bear flag here. CPI dumps you lower to 20,300, or the CPI comes out bullish, and then you actually get that move back up here to 23,800, where then you kind of wait, you kind of maybe get a little pullback. You wait for the FOMC, right? And then if the FOMC is 50 basis points, you get the dump. You get a head and shoulders pattern, right? If the FOMC is good, then you kind of continue up like this. But man, I think right now it is definitely a news-driven market. I think at the moment, even though at least for the short term, right? Because all this bad shit's getting priced in right now. It's all getting priced in, and we're sort of just kind of waiting on all that shit. Let's see. Psycho Pro, you know crypto's dead when Pax Gold is the only green coin. Pax Gold, Pax freaking Gold. Let's see it. Pax Gold is the only green coin. Let's look at Pax Gold real quick. How's everyone feeling out by the way, guys? I'm feeling pretty good. Like, this has been my thought process here. Wait, Pax Gold?
Dead when Pax Gold is the only green coin.
This has been my thought process, guys, and where you're gonna see this like this bearish euphoria come in, right? And you're either gonna chop sideways. You're gonna chop sideways for a while, right? Or you're gonna see that bigger drop into 20K, 19K region that really is bearish. One of those two scenarios. So Pax G, yeah, it is slightly green. It's slightly green. It's not even that green. It's slightly green here. So you're definitely right. You know when Pax Gold is a little bit iffy, or when Pax Gold's green, that the market is a little bit. To be fair though, Pax Gold actually did run up pretty well here. Actually, it did actually run up pretty well. How's everyone feeling? Judge said, I'm in it. It's so over stage. You're in the so over it stage. Let's see. Let's see. Let's see. The fail is so much better. It's so true. It's so true, bro. All right. So that's really that. I mean, Ethereum, the level I've been looking for is right here. I don't know if I'm going to get it. Like, the market seems to be front running a little bit. It could just be a small little bounce until we continue lower. But, this box right here is where I'm waiting for ETH. Right here. This little boxaroo. I don't know if I'm going to get it. I'm being patient. You guys know I've been talking about these same levels for like a week now, right? Which is back down at 1496. It's a 1470 on ETH for some type of long. At least a little bit of a scalp long back to the upside, at least a little bit of, bounce, retest the 50 EMA, either a continuation down where I take profits here, right? Or if we get bullish news next week, we kind of let this ride and it turns into more of a swing trade. But it's kind of the same thought process as ETH. You broke below the 30 and 50 EMAs on the daily, typically is a little bit of a bearish move, right? And you don't really got anything that I love. I mean, you could say you have some hidden bullish divergence. I'm not I'm not that big of a fan of the hidden bullish divergence, honestly, especially on this big of a time frame, to be honest. So we'll see. We'll see. I still am looking for this white box right here on Ethereum, at least in the short term. And I've been literally waiting for that for a week. It's the same thought process. If okay, Bitcoin comes to 21.4, 21.3, I've been waiting for a long from that position. Just like ETH, I've been waiting for this damn box right here. Let's see. Everyone panic now before it's too late.
XRP green all day.
I know what Horse Guy's doing. Horse Guy's going, wait, what the hell? I just started to get bullish at 25K. I was bearish from 15K to 25, and I finally flipped
I'm
bullish.
all in, guys.
And that is what I want all in there. Well, it looks like all my altcoins are down 50%, and Bitcoin's down about 15. Well, you know what I will do now? I can't take this misery. I can't take crypto anymore. Everyone is so negative now, and I'm sick of Jerome Powell. I just want to go back to Italy and just make pizzas for a living. I am no crypto trader. I'm selling everything. I'm getting out of crypto for good. I can't take this emotional roller coaster. Screw this. Screw this. Hey. Crypto does make 9 to 5 sound better. It does. John, my bad with the echo, man. My bad with the echo. My bad with the echo, bro. I sold all my Crow. I don't trust any crypto tokens. Yeah, man. I don't trust any of those staking platforms. I will never ever leave my crypto on a Crow or any type of anything that resembles BlockFi, Celsius, Voyager, any of that stuff. I will not trust. You'll never find me leaving stuff on there. Yeah, so I totally agree, my man. I totally agree. Let's see. Any fruit chicken? Any fruit chicken? Just lemon chicken, man. Orange chicken's good too, but that's not. Is that really fruit chicken? I mean, it's a Chinese chicken that is a bunch of sugar in it. Is that really a Chinese? Is that really a fruit? Technically, they do use orange in the sauce, but they also add about probably 50 grams of sugar also in that dish. So is that really fruit? I don't know. Let's see. I think let's look at this poll, man. So we got 841 votes. 70% of people are bearish, bro. That is actually a very high number. But also, I mean, it was bearish yesterday. But to be fair, I mean, is a 1% drop on Bitcoin from yesterday really a drop? I don't know. And it's probably not over. Like I said, I think it's like you got a slightly lower on this, right? Another 1-2% before you get a bounce. But we'll be here to watch it, guys. We will be here to freaking watch this. Let's zoom in on the short-term time frames. Bitcoin, 5 minutes looking kind of This is looking kind of blah. You're looking like you're kind of flagging out here on the 5 minute. Like this, right? So you had a big move down. Looks like you're kind of just making higher lows, higher highs. Looking kind of blah here. Let's just for fun, I want to see where this puts you. Yeah, see that this little flag is even still pointing you to this $21,400 level, right? Now, I think if you think you're going to bounce from right here, which I don't think this is where you bounce from, me personally. I'm looking for this white box. You know what I'm saying? I'm looking for this little white box here in the short term. And to be honest, like I'm not really seeing any bullish signs here yet. You know, I guess the only place you could really say, okay, maybe you get a little higher low somewhere at the 618s, you know, 786, somewhere a higher low here, where you get a higher low and then you bounce back up. Still think it's more likely that you kind of make your way downtown, right? Making my way downtown, and you come back down to this 21.3, 21.4 level, which is cool, right? I mean, it is what it is. That's the next major support level. So like, it makes sense just to go there, right? Sometimes we overcomplicate this. It just makes sense to go to 21.3, right? pull. When down, 23 always comes before 21. When down, 23 becomes before 21. Well, we're at 21,700. You know what I mean? Like, but I mean, I guess I get that pull in a way. Let's see. I feel bullish as fuck to deploy more alts. Deploy more alts. Yeah. I mean, for me, for altcoins, I mean, I'm happy kind of where I'm at. I mean, I guess this is my load up zone for altcoins is in here. Is in here.
Just had to come on and express my disappointment that I knew this was gonna go up,
but you know,
and I just missed out on.
I really want to see like that panic, that real panic.
Would have been look at that. All right. We might hop on in. We're gonna rock and roll. We're rocking and rolling, baby.
Blowing the wind, right? I mean, if this shakes you out,
Let's see.
Make it in true bullish trend, to be honest.
Gonna do a quick
you ain't gonna make it.
EA review. See what's up.
In a true bullish trend, where Bitcoin drops.
Damn it! You know, look at that right there. Look at that right there. I thought it was gonna do that. I got out too early, and if I get saddled with a bad position, because I'll be a little aggravated. So I had at 88.25 over here. Knew this is gonna pop back up. I thought the strong was going this way. I think it's gonna go. I think it's gonna go up and hit a midline. That's generally what it does. So here we go. All right, sweet. Got my position in. Now we're gonna let these stop losses find somewhere decent. Everywhere is gonna suck, but I'm doing 86, I guess. 69. There we go. What numbers?
Sideways for like, I mean, it depends on what time frame you're looking at, but this would, I mean, if you're just eyeballing it, probably looks like a 2, 3, 4 months of sideways before you eventually come back up.
Nice.
That's also
turned on me instantly.
To me, that's
the last.
What my thesis is that's like the worst case scenario is Bitcoin does this for the next like 3-4 months. You know what I mean? Until the storm kind of.
I could have got it at the exact same.
In the meantime, it's like.
What a world.
If the CPI comes in next week and we get 25 basis points, I wouldn't be surprised if Bitcoin does this, to be honest. Sideways until CPI, right? CPI is bullish, comes up, they maybe get a little pullback, right? FOMC, okay, they see that CPI comes in better than expected, right? They do 25 basis points when the market's baking in 50, and the market pumps after you get 25 basis points instead of 50, right? That's the bullish scenario. That's the bullish scenario. Either one, bro, it is what it is. Bitcoin's been in this range for 9 months. 9 damn months in this range right here for 9 months. And by the time that you even get out of this, they could be in this range for a year.
Might be a little feedback from the other stream that I'm dually playing, but kind of want to listen to it for a bit.
Give me some more before it's time, man. Having's a year away.
Oh my god.
Give me some more of
come on
juiciness in here if you're gonna give it to me. I just don't know if the bear.
If I lose this trade, that would eat all the.
Let's see, new lows.
Would eat all the profit I made for today, so that would be not fun.
Since June. Facts. It's been kind of that doom and gloom call by the bears for like 9 months. Yet Bitcoin hasn't really gone lower than this zone. You know what I mean? And like, if you go to the total market cap chart, right? USDT dominance looks pretty bullish, by the way, guys. This is another reason why Bitcoin could see a little bit of a drop. USDT dominance is breaking out of this zone, right? Where you had these 2 previous highs, you are breaking up. So this is looking a little bit bullish. And this trend line right here, that's come up like this, would be an interesting point to tag. And that would be like about a 10% move up to the upside. Let me actually, excuse me, as I'm burping up a storm here, and probably farting too, you just don't know it. Yeah, see, it's right near this golden pocket zone. So that's like 6% to 10% move up for USDT dominance.
What a travesty.
Super bearish scenario happens.
What a travesty. Jumped in too fast. Now I might have to work my way out of this. I'm going to lower it down actually just slightly above that prior point.
Let's see Bitcoin. Bitcoin's still chilling at 21,712, man. 21,712.
What am I doing?
Let's see. As does DXY. Yeah, DXY looks bullish too. You are back above this zone too. And we said, if you break this zone, 107.75 is the next level to watch out for.
I'm on.
Which
Good.
about a 2% move. It's a little bit.
Man, just hit right on my bell point.
Half this move. So we'll see, man. I mean, I know everyone. It's gonna be talking heads for the next week. This is why I'm so sick of this macro shit, man. Because now like Powell said the same shit that he always does, right? Where he sees the markets coming up, so he talks down the markets a little bit, right? Everyone starts freaking out based off what he says, but we really just have to wait.
And now we wait. Wait. What a game.
Actual news that matters. Man, it is what it is. We have to deal with the macro LARPing, man, because we're all macro economists now, right? We all got our degree in macro economist in 2022. You know what I'm saying? Yeah, bro. I didn't even know what CPI was back in 2021. I didn't even know what PPI was. I didn't even know what it
and there we go.
Was in 2021. But
on break, just hopped in.
About that now. I know everything about it.
Didn't do the proper TA, and there we go. And look at that.
It is freaking over. Do you see the yield curve inversion? Oh my God, man. We are so effed. We are so effed.
I think we might get out of here decent. I mean, I could get out of here right now and still be
oh my God. BlackRock's telling us
a little bit over $55 in profit for the past 2 hours, but
continue. The big companies are telling me to sell.
I'd rather not have a losing trade. But sometimes trying to not have a losing trade makes you then have an even bigger losing trade. So there you go.
We're gonna go down. 14K is coming like imminently. What you guys think over on Twitter too? Oh yeah, 12K. Oh yeah, 12K is possible too. I think 14, but 12, that's even better. All right, let's see. I got my finance degree in the last 2 years. Nice, bro. Finance degree.
We're going to the moon.
I'm proud of you, bro. I'm proud of you. I'm proud of you, man. We're all macro experts. Don't believe that crap. It was selling off way before Powell. It tried to break 25.2 and failed, so down we go to test the lows. Yeah, I mean, that's cool. That's cool and all.
Now it's just a waiting game.
It's going to have their opinion, but like I said, if CPI comes in bullish next week, we're all going to forget about this dump, and Bitcoin's going to pump. You know what I mean? Like that's the funny part of all this, you know. That is the funny part of all of this nonsense, you know. But let's see what you guys are saying in here. Strap up, baby, strap up. That meeting today was the total zoo. Oh yeah, it was. It was a total snooze fest. They're all snooze fest, man. He just kind of says the same thing he always says, and everyone gets all hyped up about it. I listened to it. I listened to it in the background, but man, that shit was boring as hell. Any altcoins, guys? Let me know if you look at any altcoins. What's going on, Sam Raby? Elmer, thanks for coming to member. Appreciate that, dude. Wes said XRP green all day. XRP did have a good day yesterday. Or technically it's yesterday, but it is today. XRP. Actually, see, XRP is I actually like the XRP chart. Funny enough, in this zone. Not because it's pumping, but just because I like the structure of it, right? I like the high, the low, the high, the low. I think it might still kind of do something like this, you know, as XRP kind of just slowly comes down. But I actually like the chart for an eventual good size move to the upside. I don't think so yet. Once again, I think we got to kind of wait for all this mumbo jumbo that's going to come up next. But this sort of, you know, level that you kind of been holding this whole bear market, right? Which is, you know, just kind of continuous bounces throughout this range. You know, if you do something like this and you come back down inside this like little wedge formation and you bounce almost off the 786, I kind of like this for a move up. Once all the dust settles, you know, once we get all this nasty dust out of here, man. Because remember the dust? Remember we used to talk about the dust, guys? We used to say, let the dust settle, bro. Let the dust settle. You know what I'm saying? SEC is short for shit-eating clowns. Oh. Shit-eating clowns? You mean like these clowns? I think it's like this clown. Dun, 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 dun. Shout out to the shit-eating clowns out there over at the SEC. You know what I'm saying? Over at the SEC. No, I like XRP. Actually, one of the better sort of accumulation structures I like in the zone. Eventually for a move up, I just don't think it's going to be right this second. I think right now we're kind of in that boring low liquidity phase where it's just super freaking low liquidity and like you're not really seeing anything. Like, what's the volume that's coming in right now? Let me see the volume on that little move down we had right here. Volume on that move down. Let's see. Actually, you actually got a nice. Oh, it's the 5-minute chart. That's why. Let me go to like the hourly time frame. That's it. That's a man. That's it. That's all the bears had on that move down. It might, like I said, it might not be over, right? But man, that is it. On the volume on that move down, shit. Damn, I would have thought that would have been a bigger player pushing that down after such a long, boring time. But man, look at that, bro. I would thought you were gonna see a nice little volume candle there. Definitely not like this one. Obviously, this one was a much bigger move down, but man. It's even lower than the volume that you got in this little move up over here. Damn, that's super low volume. Anyways, like I said, the move might be over. Like you might get that volume on this little second leg. If this little bear flag plays out and you get this move down to this 21.4, that's probably when you'll see the majority of the volume coming in right there. You know what I'm saying? So we'll see. Like right now, guys, I really don't think you're going to see like a big dump. I know everyone's calling for like a big crash and a big dump like right this
Look at that. I step away, go pour myself a drink, I come back, and there we are, right back to ground one. You see, that's the thing with the S&P. It like
I just don't think we're in that phase. I think we're in a
when you're right, you know. And it'll do these like up, down, up, down, up, down. But you ever watch like this guy called Tino of Traders Reality? He talks about this pattern pretty much just, you know, up, down, up, you know, and you break that line right there.
Which would happen if the CPI is bad. You'll probably see 19K next week. I'm not gonna lie. You probably
that's kind of what we're looking at right now, and it does variance to this.
But I don't think it comes right now. I think that comes next week.
We are no longer listening to Mitch Ray.
Yeah, man. I think it's mostly gonna be crab.
But anyways, you can see these semi-style patterns in both directions, coming down, going up, coming down, breaching. Same here. Boom, boom, boom. It's inverted. Now, not in. Their highs, higher lows. So I'm hoping, and I think it is going to touch this line right here at about 39,001. Maybe I'll put an expectation of that. Maybe. Okay.
Let's wake up China. We want some volume.
A little cluttered over here, and the internet always gets damn slow at this time of the day. Come on, come on. A little bit longer. Perfect. All right.
Let him sleep in. No, actually, if we're gonna do something.
All right. Oh, God, look at that. Look at that. I'm kind of in the middle from what we can see of recent history. There's been drops. There's been movements back up, you know, with the Fed speaking and things along that lines. So, kind of a busy week, it looks.
Here we go.
Oh, and we are cooking with gas, my friends. We are cooking with gas. Here we go.
When you're bullish and you feel that euphoria, right? You feel that like I think this is gonna keep going forever. Who is feeling the bear euphoria out there? Let me know. Let me know. In the chat. It's cool if you're feeling it, right? I feel bull euphoria all the time. Shit, it happens all the time. Who's in a short right now?
So the point is, like we were talking about with Kino from Trader's Reality, you see that line? We wanted to break this line.
Who's out there?
And the next point is going to be up here. I do truly think that it's going to hit here, so I'll put a little dotted line for everybody.
Like we said, USDT dominance looks pretty bullish. DXY looks bullish right now. This probably continues bullish for the next week until we get something that changes the narrative here. Earliest attempts to change the narrative. Let's.
I don't really do this, man. Sometimes.
Yes, right. We look at stock market futures, which are right now. Let's go back over here, shall we? Which are pretty much flat, and the DXY is pretty much flat.
Here we go. We got our target.
It's kind of just sitting, you know, right above the support level here.
It's the pattern. We're still in these patterns. These patterns occur all around in different shapes,
Small little green candle.
styles, patterns within patterns, but a lot of times that's pretty much forming all the time in different manners. Very interesting. Sometimes you have to make space to go higher, and that's what that is.
Yesterday, guys, is this probably just goes up and down and up and down until CPI next week, and that's going to be the kicker here. That's going to be the kicker as the market prices in higher rates, and we kind of keep doing our thing, you know. I think you know, I guess I keep saying it's easy just to say we're going to dump or we're going to go to the moon. That gets the clicks, but I think it's going to be boring. This is the boring period here for a week, and both sides are going to hate that, right? The bulls are going to be salty because we're going to have to listen to the bears for a week saying I told you so. And the bears will be pissed off because they're waiting for that imminent crash. They want that crash right now. You know, they don't want to wait. So it could be one of those weeks that we sort of wait in here as we sort of await the moves. If we want to keep like this, like actual logically. Let's see. Bitcoin right now, 21,726. We're still just kind of chilling out in here. As we did get a little bit of a dump before the stream started, and then we started to come back up like a little flag.
Come on. Kidding me? Get back up there. I'm not going to let this thing turn on me again and hurt me.
Finally,
no.
Where to come in at?
Come on.
Fear and greed. Where we at? Nice, man. Give me that fear. Give me that fear, bro.
Might be a little feedback from the music, but I'm for the
man, that gives me a little hopium.
Jordan Comaran show, but don't think so. I'm gonna put a little what a little malarkey.
One more hit. I need one more hit. Hold on. I'm not high enough here. I'm not high enough of the hopium. Give me one more hit. Come on. Oh, come on, hopium. Man, it really doesn't want to play the hopium again. It really doesn't want to do it. I need one more hit of hopium. That was not enough for me. Hold on. Here we go. We got this. Jordan, you can do it. You can do it, man. There we go. Man, that's some good shit. So we got 44 on fear and greed. That's good. We're finally out of that range, which was sort of neutral, that we were sort of just sitting in for about a month. We were sitting up here in this like 50 to 60 range. Now we're coming back down, and now we're back in fear. You know, it's very scary out there. It's very, very scary. Watch out. You might run into a bear outside, and he might eat you. You know, he might eat your balls. You're trying to kick his balls, but he might eat your balls. You know, so be careful. Boom, bitch. Yeah, man. We're back in the fearful. People are very, very scared. Fear and greed ads. Why is it like we don't get anything cool anymore? We just get this. Yeah. What is this? Throat phlegm. Your body is trying to tell you something. Throat phlegm. Holy shiza.
All right, we're just waiting for this to pop up to about right after the alarm we set. You can see the alarm on the right side. All these different colors. The blue one's my price.
15 trading opportunities today.
See the alarm set right here. We're hoping to get it up to here. And then I'll set the stop loss up. But, you know, even if it's here, it's even that this might be waving out. And since we just had a chance to take this thing out in a $25 profit, not much, we can at least put it at $12.50. Hope that it goes higher. And if it does, here we go. If it goes back down, we can reposition ourselves at a better price. This is what we're thinking. to occur.
Bro.
What Bitcoin's doing.
Okay, it doesn't want to give me anything cool anymore. I think True Classic Tees
Marginally in profit still.
They used to be on there every day, and now they're never on there. I guess we'll talk about True Classic Tees a little bit. Let's say True Classic Tees, and we'll check out a little bit. I need some new T-shirts from True Classic Tees, man. I'm really running low on T-shirts. Man, my T-shirts, bro. You guys need some T-shirts? I need T-shirts. We all need T-shirts. George, you need some T-shirts? George, you need some T-shirts, bro? George? Yeah, I need T-shirts. We all need T-shirts. All right, let's check it a little bit. See if we can get True Classic Tees back on that bitch. I see 3 levels of drop from the top. Should have some relief real soon. We should, in theory. I think it's gonna come once we dip into this white box. I think we got a little bit lower to go here. This has been my box that I've been waiting for a week. You know what I mean? Like, I hope it comes down here because I've been waiting for this. Imagine it stops right here at 21.5 and it just bounces back up from here. Oh my God, I'd be so salty. I'd be so salty. All right. So yeah, we kind of talk. I continue to talk about the same shit I've been doing because nothing's really changed. I mean, this is all part of the equation here. That's why we had these labeled for like a week now, right? Schematic 1 support, which we're coming up to now, and schematic 2 support in case we do dip lower. So volume continuing to fall off a cliff, which is cool, right? Falling that cliff, that volume just falling off a cliff. I do just think last time we actually dumped from this point, right? You guys can see that volume actually was coming up. So like we had 25K and then we dumped all the way down to 18K, right? So this drop right here, you guys notice on this drop that from this point, volume actually was coming up. You're actually getting more volume as the price was getting lower. Whereas this time, price is coming down and volume is from that point, right, of the highs. Volume is now falling off a cliff. A little bit interesting. So we'll see. But this is actually what you want to see from the sort of spring, and then you go into that pullback here. You want to see that fall off of volume because that means that people aren't feeling confident to buy in here, which is pretty nice. I like that. I like that. It's actually what you want to see. Through sickness and health, through dumps and pumps, we got this, Vikings. I like that. I like that. True Classic Tees. All right, let's check Fear and Greed. See if we get some True Classic Tees in here. All right, I'll give it three spins. True Classic Tees. Hello? Man, it's not going to do it, is it? I think they're bankrupt, man. They couldn't afford the Fear and Greed ads anymore. It's all good. It's all good. We don't always all need the Fear and Greed ads. You know? Let's see. Anderson said, good day to DCA. I would say, yeah, on BTC and ETH. I would say that. 100x short. 100x short. 100x short it, man. 100x short it. You do got a little bear flag right now. Sorry, I wouldn't be surprised if you see a little bit more downside here.
Welcome back. Today we discuss stocks, commodities, and cryptos and really deep dive into some of the key levels that we've seen this week. As you would have known in the previous video, we talked about being on the expected options weekly lows. This is where we expected a bounce, and it did occur. The question is, can it actually maintain it? We look deep diving into all of the markets right now, but more importantly, the big news ahead and what the Federal Reserve has said about this stuff. Let's talk about it right now. Well, welcome back everyone to the Daily Show. We've got the news, lead indicators, macro data, and of course, hottest charts coming your way throughout today's video. But let's begin with this. Bad economic data is bad. Good data is even worse. This is according to JP Morgan. If we scroll down, they've got some models to do with the forward funds rate, and they've basically modeled that the market is around 5% overpriced to their current expectations. I can tell you this looks very much like a liquidity chart. We saw kind of like injections from central banks around the world coming through in that January period. But since around 15th of Feb, we've realistically seen an incredible decline in basically the liquidity out there from central banks. Things are starting to tighten and markets are starting to suffer for it. Now, what about the idea of how high can we go? We know that 2023 is still around interest rates. What is the Fed's fund rate terminal going to be? People are now starting to price in 6% as a possibility. Now, I've always said, and this has been true in all of the past periods, that usually when you push past 5.5%, you'll usually break something. This has always happened with the Fed. We've got some charts on that later on. But on top of that, to kill inflation or to stop it, you generally have to push the current Fed's fund rate above the inflation number. So 6% is now the new expectation by many, but is it the expectation by the street? Follow @FX Evolution over on Twitter if you're interested in some of these charts. Links in the description down below. So what about the expectations of 50 basis points during the 22nd of March Fed meeting? Now, this meeting is super important to the markets, but more importantly, it's the news leading up to it that's more important. Jerome Powell's already told us that he is interested in the next 2 to 3 data points. One of those is coming up this Friday, and it's non-farm payrolls. If you think about 1 month ago, we literally were at a 9% expectation of a 50 basis point. Now we're at an 80% expectation. Look at the 1 week to 1 day ago. It's completely shifted over the last couple of sessions. We also posted some thought processes here last week around the idea that we believe that utilities, a pretty hated sector, might start to outperform the market. And guess what? It's not quite there, but on a 5-day rolling average of markets, we've got utilities second best, sandwiched in between technology and semiconductors. Was that the best one though in the last 24 hours? No, it was Semiconductors are in their own world. All they're doing is just constantly spamming AI everywhere. And yep, it's working out. This is clearly a disconnected market. It's just like any other disconnected market. If you have 3D printing back in whatever it was, 2013, marijuana stocks back a few years ago, and then of course we had hyper stocks as well. They're in their own world. If you're trying to short against those, we haven't seen strong signs just yet that semiconductors are weakening or that any AI stock other than Tesla is showing some weakness. How did utilities perform in the last kind of sessions? Well, did pretty well, just behind technology. It was one of the leading ones, which is again what you hope and expect to see. Let's talk about federal funds rates. Here's a chart that we usually bring up. Again, expectations have changed. The 8th of March and the 7th of March, we've seen that kind of rise. This is a big difference. And more importantly, the cuts that happen are slower. Look at this. We're all the way projected out to 2025. So it's going to be higher for longer. Look at the differences between the last couple of months. We've gone from being at 3% after the cuts to now being materially above 4% even after the cuts happen. Higher for longer, more pain for stocks, and more importantly, more pain for zombie companies, because we believe that this is one of the biggest issues that everyone is ignoring. There are so many businesses that make no money in the stock market and across the world, and they're going to have to, guess what, get new money funded at higher rates. How are they going to be able to pay for it? This will be, I believe, a storyline that will come out over the next 6 to 12 months. So we've used this chart plenty of times. We know that we're following the no recession path right now. We know the bonds market is telling us there is a recession coming due to the inverted yields. We can show you that on the chart, but if you're not sure of what inverted yields are, I'd suggest maybe watching the previous video that we put out. And then we also know there are a few concerns. We've got EPS growth basically turning negative. This is usually precursored bad things in the markets. Again, timing is everything here. And we also know that ERP is not being considered right now. So that's basically equity risk premium. Do we know that the cash-free rate is that actually being considered versus stocks? Stocks don't look as attractive as they did maybe in October of last year when they were trading at forward PEs, which remember forward PEs, better PE to use, that were underneath the median and mean. And that's very important. You know, where is the market trading? At the moment, it's trading around 18 times PE, maybe a little bit less than that. So the average is around 16.9. So if we have 16.9, we're trading at 18, we're slightly overvalued based on normal times in normal markets. So here we've got, of course, the Fed's book, and we know that they're starting to taper. They're continuing the taper. That's not changing. We don't want to fight the Fed, but we also need to be aware that, of course, markets will have these epic rallies in them. So we'll be talking about our short-term time frame thought processes later on in today's video. When the Fed tightens, it breaks stuff, guys. It always does. This time around, we've got the fastest tightening ever in history. So because we're tightening at a really fast rate and having to push it a little bit further than maybe the Fed initially expected, they've broken something. I guess it's zombies. Your guesses in the comments down below. I am reading them. I'm always interested in what you think. Now, when the Fed pivots tends to be a point where stocks crash more, usually around 1/3 to the 2/3 away through the pivot. What a pivot means is that the Federal Reserve stops hiking, starts holding it, and then starts to cut. Now, I don't expect these ones, but of course, the dot-com bubble, one thing about that was we came off really high PEs, we saw compression, and it took
All right, so
time. So we saw when the pivot,
as you can see, we
21 months
back in the
now,
green for
some
the
have been shorter than others. So I think
second time.
it's going to be a bit of a blend
Probably
between
not
these.
going
We've
to
already
mess
taken
around with it, but I
price
like
markets,
this. You see,
but if
just
we
trying to
do
break
end
this
up in a
ceiling.
recession, or at least that looks
Higher low.
likely, markets usually will drop.
We'll start over
into the
here.
pivot.
Bottom.
The Fed pivots because something broke in the system.
High.
They're trying to
Higher than that
support
high.
it, and ultimately that leads to
Low higher than that
compression in
low.
asset prices.
High higher than that high.
Opportunity, because you should be
And I can
optimistic
count
in
this as
markets,
one.
generally speaking. If you're not optimistic,
Low higher than that low.
mostly long term.
High
and you
equates.
call like
Low higher
5,000
than that low.
ends up tops to markets, and it will
High
go bad for you.
equates.
So you must be generally optimistic on economies.
I think that does have the capability to push
if it's
above
something
this.
to do with,
So
massive
we
debt
are
involved,
going to
I would
be
a little bit more
holding,
terrified.
but
In
not
this
for
case,
long.
that's
Gonna
really
set the
only being
stop loss
shown in
soon.
China. So just remember,
What I
at the
want
moment,
is
Western
for it
societies
to
in
hit
general, although lots of debt, not necessarily toxic. Just
39.8975 before I put my stop loss at.
Really neutral. Everyone has basically no opinion. This is a time
Let's see.
where markets
Where am I gonna
are
put my stop
showing
loss at?
incredible shifts.
Yeah, 39.8925,
Economists
fine.
have 42% spreads between the bulls
But I
and
might
bears
just
of the economy for the year
wait till it
ahead.
hits
No one really knows, so you're having to focus on short-term
89.25.
Those are the signs to when you believe there's an edge in markets based purely
I feel it's going to
on,
break
of
this.
course,
I feel it's going to break
the
it. So
metrics that we're seeing
I think it's
right
safe to
now
wait
from
and not
the Federal
adjust my stop loss
Reserve,
into automatic
obviously
profit
pivoting will
yet.
be a big component of that. If you're interested, we are doing a giveaway for the month of March. This is just to say a big thank you to everyone that's out there that's subscribed to the channel. Subscribe, fill in this form, and it's as simple as that. So just before we jump into the hottest charts, I wanted to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Here we are on the home screen of the application, and we're selecting the ability to customize our feed. Now, we don't want every bit of information out there. Sometimes we're interested in options, sometimes we're interested in the latest news, but we're not necessarily wanting to do the academy or look at some of the hot themes. For me at the moment, it's all about options and obviously understanding the 0 day to expiry options. Some unusual flow that comes through could be interesting as well. So here we have the options screener. You can see
Here we go.
this is now
What I wanted. I just wanted to push up 25 more cents. We're going to nail our stop loss.
NVIDIA. So why could we be interested in things such as that option screener?
Or
Well,
just
it's
a stop
quite
loss
simple.
into
With the
profit.
advent and rise of 0 day to expiration options, you need something to be showing you these unusual flows. That can also help us to understand when markets need to actually hedge off those positions. And with the illiquidity we're seeing in markets, this is obviously having a big effect. If you're interested in Tiger Brokers and some of the special offers, check out the links in the description down below. And of course, if you're from the Australian audience out there, we've managed to hook you up with some additional Microsoft fractional shares. All you have to do, open an account with as little as 1 cent and grab those bonus offers. Thanks so much. Check them out today. All right, let's get into the charts and get into all of the key levels that we're watching right now. We'll start off here with the US 10-year. Now, I expect the US 10-year to start to show us weakness. It hasn't yet, but basically consider the US 10-year as dictated to by the market. If the market is actually starting to get scared, and this doesn't mean the stock market, this is more bonds. If the market's starting to get scared of the economy, we should see this dip off. At the same time, if that does dip, we should see TLT start to perform a little bit better, which is of course treasuries, long duration yields. I expect to do okay. And we also should see copper start to dive further. Now, I've been a bear on copper since up here. I've continued to maintain that status. I don't see a sign yet to show me that copper is going super bullish, but I would like to see copper turn over. If you're a bear in stock markets, you need copper to basically get flogged. And when it does, that's a good sign that bad things are coming. We also know that high yield bonds, although the stock market held up over the last 24 hours, high yield junk bonds did not. They actually fell further. If this makes a new low and the stock market's rallying off, yeah, that's not good, especially if utilities, staples, healthcare, those types of sectors are doing better than the rest of the market. So we're looking for those signs. At this stage, we know that high yield dropped. That's certainly not positive. What about what's going on dollar index? Well, as it turns out, a bit of a gap here. So you probably think that dollar index will want to cover that gap. But in general, we are at an absolute critical level for dollar index. We've moved into our supply. We've taken a new higher high past this high over here. And we now have new levels to be saying, okay, where does the trend actually end? Well, now we know that if these levels down here are broken, 104, kind of 14, etc., and we can actually go over here and probably put in a daily level close as well. Somewhere in here is where we expect buyers to resume for the DXY. If this is broken, we can kind of say those short-term timeframe stats that we put out a few videos ago, if you want to check it out, they're kind of playing through. And I'm not seeing the flow in that you would expect for DXY pumps. So although the US dollar is on fire right now, and if it does breach this big white line here and close, I expect it to go back to 106.85. I could see this all part of kind of like what you call like a dead cat bounce. Now, we've been rallying. It hasn't yet, but basically consider the US 10-year as dictated to by the market. If the market is actually starting to get scared, and this doesn't mean the stock market, this is more bonds. If the market's starting to get scared of the economy, we should see this dip off. At the same time, if that does dip, we should see TLT start to perform a little bit better, which is of course treasuries, long duration yields. I expect to do okay. And we also should see copper start to dive further. Now, I've been a bear on copper since up here. I've continued to maintain that status. I don't see a sign yet to show me that copper is going super bullish, but I would like to see copper turn over. If you're a bear in stock markets, you need copper to basically get flogged. And when it does, that's a good sign that bad things are coming. We also know that high yield bonds, although the stock market held up over the last 24 hours, high yield junk bonds did not. They actually fell further. If this makes a new low and the stock market's rallying off, yeah, that's not good, especially if utilities, staples, healthcare, those types of sectors are doing better than the rest of the market. So we're looking for those signs. At this stage, we know that high yield dropped. That's certainly not positive. What about what's going on dollar index? Well, as it turns out, a bit of a gap here. So you probably think that dollar index will want to cover that gap. But in general, we are at an absolute critical level for dollar index. We've moved into our supply. We've taken a new higher high past this high over here. And we now have new levels to be saying, okay, where does the trend actually end? Well, now we know if these levels down here are broken, 104, kind of 14, etc., and we can actually go over here and probably put in a daily level close as well. Somewhere in here is where we expect buyers to resume for the DXY. If this is broken, we can kind of say those short-term time frame stats that we put out a few videos ago. If you want to check it out, they're kind of playing through. And I'm not seeing the flow in that you would expect for DXY pumps. So although the US dollar is on fire right now, and if it does breach this big white line here and close, I expect it to go back to 106.85. I could see this all part of kind of like what you call like a dead cat bounce. Now, we've been rallying this thing all the way. I would say completely neutral on it at this point, to even looking at short-term timeframe scalps. Non-farm payrolls is coming this Friday. I expect it to hold around these levels, waiting for that news. Remember, ahead of key news, we tend not to break zones. But when the news comes out, zones are allowed to be broken. If we move over to gold, it's continued kind of its weakness here, but this is all to do with yields. If we continue to see 2-year, 3-month, and even 10-year rise, don't look at gold. Gold will be bad and it will continue to go down. I still have long-term plans on gold to go bullish, but not yet. And I've said this since January, the end of January. I've been bearish on this pair, and I still continue to be so. It hasn't hit my super critical levels. I'd like to see gold back down in 1790 and even back down here in the 1730s before all said and done. It hasn't happened yet, but we'll continue to update you if we see switches. We'll move over to the Widowmaker, which is natural gas. Everyone seems to love this thing right now. I still think it can come down further. There are serious concerns with natural gas across the board. I'll keep updating, but look, we saw the signs of a really decent potential bottoming down here. As it came through this price, we got a little bit more bullish on it. We obviously saw it rally. I believe it's coming back down to something like a 246. As it comes down to that level, you know, it's going to be critical how it interacts with that zone. But there are some concerns over contango and other things with natural gas. So be careful. It's not like a traditional stock here. And if you're buying an ETF, remember they're futures contracts. Look up the ETF code fact sheet, and then you'll find out what you're really buying. Because ETF doesn't mean safety, it just means exchange traded fund. Do remember that. Let's move over to Tesla. Ooh, not cool, yeah? Very bad breakout here for this. So this is obviously a new low that's being formed after what we have spoken about at great length, being what we believe is distribution. I still think that Tesla can make it lower, and I still am kind of bearish on this down to these 145s, where we've got 61.8 retracements and, of course, a gap fill. So, yeah, unfortunately for Tesla, this isn't looking so good. To feel a bit more confident on the Tesla side, you need this thing to instantly rally in the next session and really put in a nice pump. Because
Man, it's all finally back into profit, just about.
Nothing much good going on
For the
volumes, and most likely
4th time.
So
All right, I'm not going to mess around this time. Oh, there we go. In profit. Let's see.
Small options week in terms of Tesla, 309,000.
Man, I really think it's going to hit this.
We go over to the big one,
And I like these higher lows. This is a real ceiling right here. I do feel we got the momentum going for us.
And generally speaking, the puts are fairly thin in
I'm
comparison.
going to check out the 15-minute.
Who's that? 250s.
Okay, we're almost at a point. 10-minute. That'll.
And look, the hundreds were put in.
You know, I think we're going.
But realistically,
it's taking a little bit, but I just don't want to fast wick down, take me out, and then it goes back up. But I don't know if that's going to occur at this time.
But yeah, very important. If Tesla's going to hold, it needs to find buyers over the next 24 hours. Let's move over to Apple. What's going on with Apple? Well, if I was a market maker, which I'm not, but if I was,
see what more we can get out. We're already what is it?
I'd probably push Apple above these areas.
$130 to $134 in profit so far for today.
Apple is
like to make that a little bit over 200, but
pretty decent buyers behind it
with this trade, but
saw the first gap fill.
I might be a little impatient
on the chart, generally speaking, but everything
I might just take what I
don't think there's much edge on this chart in the middle. I mean, even with the last close, it's a doji, so not too much information going on there. What about Nvidia? Does it still hold intact that it could be a trap?
Come on.
Absolutely.
Move up a little bit more, and I am setting the stop loss into profit. So at worst, the most will make is $10 after fees.
60 to fill that gap. That's over here. So that's
Don't want it to, I still want it to rip me up. Push up a little bit more. Looking for it to go up 50 more cents. We're going to hop in this. We're going to push this stop loss up, and then goes up a little bit more. I might pull the limit down and see this golden pocket up here is key. This line right here is key. You know, I might do 90.25, but it just seems like it's being messed with this little level right here.
If the market goes down, I'd like to see utilities outperform.
Yeah, this is going to be the third time. I was actually in profit here. So 1, and it went down, 2, 3, 4.
To rotate into these types of defensives. Let's move over to the XJO. This is for the Australian audience out there. A lot of people have been sending me messages saying, look at my trend line, it's going pretty well. Yeah, the trend line's okay. I think that, you know, ultimately...
All right, after this, if anybody wants, I can
of the American market,
go review a couple of assets, other assets, and see what Bitcoin's doing right now.
It's just the nature of the Australian market. And in general,
761, we have our long at 725. We also like another long right here, so it'd be basically par with the course. Long.
So it's a mix.
Like Bitcoin kind of going up to this region, so we'll see.
Bounced off this was correct. I mean, this was a very well.
We really got to get out of this thing, or just at least get the stop loss set before we do anything. Or look anywhere else. It's right on the line.
But if it breaches underneath that, I wouldn't be surprised at all for this thing to go back down to.
And this is FX Evolution we're listening to. Some really good economic stuff, just general across the board for all assets. So you listen to that and just wait for this thing to move into profit and go from there.
Or down at the moment, a little bit of respite in between that sell-off that we saw in the previous session, thanks to Jerome. We're building a position. The question is which way? And this will only be answered most likely by the SP 500. So let's have a look at that one. We do have some new monthly pivots, which I thought I'd put on the charts. So here are the monthly pivots. We've got our R1, S1, S2, R2, etc. And I'm liking the idea. Well, actually, I don't really think the pivots are offering too much, but on the top end, it's really interesting to see the R1 pivot sitting around 41.30, because 41.30, as it turns out, is a relatively important zone. It would push, of course, a new high past this level, but it would also push into a fairly heavily traded zone through this range. So effectively, if we did push up to there, hit the monthly R1, there could be some confluence with actually still shorts coming through at that zone. Originally, I thought if we got through 40.90, we're probably going bullish, and I still think that's probably the case, but we need to always assess the situation as much as we can. So if we took a volume profile through this entire area, it may have updated a little bit, but notice there's that 41.20, which is a pretty significant zone, I think, should the market get up to it. Let's talk about the here and now. I almost say it's a carbon copy of this one, which is a market kind of finding base, dropping off, coming back up, struggling around the zone, and then just getting nailed. Here we have a very interesting point. We have a market that has made a new lower low, but notice that demand. See the demand that we had in the previous video, which was over here? We're still theoretically holding that just. So we've kind of got like a low, high, lower, low scenario. If you're a bull in this market, you need 4K to be taken. 4K, 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 4K. Once 4K is taken, you can feel a lot more bullish about the markets. At this stage, you know, it's a bit nasty here in the futures. It could easily drop off, but I'd like to see 4K get taken. If we get a close underneath 39.69, then that may put pressure further to the downside. So the markets, I believe this is where bulls do sit. This
thing is just gonna make me wait it out.
And of course,
Watch it just drags the dumps and just screws me. All right, well, I might get out of here a little sooner. Get out of this trade a little sooner. Put the stop loss in a little sooner than I wanted. But anyways, it'll be another $10, I guess, on top of 130. So then we go for the next trade. See what's going on.
Then we should move easily to 41.20, 41.30. I still think we'll probably beat that level if we do get up there, but that's where the final bears sit. Past that point, we're talking 4,300 plus. If you're a bear on this market, you celebrate new lows here, and you especially celebrate anything under 39.20, as then we open up 37.50 to 3,800. and really those lows coming in, which could provide some pretty nice opportunities. So I like this zone at the moment. I like the structuring. We have to see whether the market can find rallies. And around the time of this recording, around here, is realistically where those rallies should start place if they're going to. But 4K is the key one to break through to actually show it's instigated. Before that, yeah, a bit dodge. Let's move over to the 10th of March. What is going on? Let's refresh this. So we had a lot of 395 puts, which is pretty much where we are right now. So we'll go to the 9th just to see it. 395 puts still being one of the key things. Then let's look at the 10th, which has the bigger options on it. 395 puts, 60K of them. Look for the 0-day options expirations during the day. Obviously, you want to see what's going on there, but 395 seems to be still an important level. Max pain sitting at 401. If we move over to Bitcoin, it's still stuck within our two ranges. We're getting close to that watch reaction level, which is at 21,364. I'm not really going to go super bearish on it until we get past 20,265, which is, I believe, some important zone over here. But in general, you know, Bitcoin's looking pretty crappy. It came off our top bear level. It's continued to sell off and look pretty weak. And at this stage, it's getting close to where it needs to find some buyers. So Bitcoin hitting into the critical zones, hopefully in the next 24 hours. Now, we mentioned at the start of the video, it's all about the news, and it really is. Jerome Powell said, we're looking at the news to figure out whether we're going to raise rates a lot. Guess what? Non-farm employment change. This has got to be one of the factors into the news. Are the jobs numbers hot or are they weak? And as JP Morgan said, you know, if you have hot numbers and everything looks great from the US economy, the Fed's going to have to do more with rates. If
all right, here we go.
And they start looking sick,
looks like we're getting our second chance. Come on.
off from a recession. Yeah.
You like this? You like day trading and
really good, but the market's still a
live trading? Please like and subscribe.
Shifted quite a lot.
Trying to do this 5 days a week at least. Continue it going.
More importantly, the amount of puts in the system is still relatively high. Once we get past March's expiration, though, which happens only in a week's time, maybe we're opening ourselves up to a little bit more potential bearish pressure. There's not as many puts in the system as there once was, thanks to the January and February runs in the markets. If you haven't already, please subscribe, smash that like button, of course. Click on the links in the description down below if you're interested in following us on any of the socials. And also a shout out again to the sponsor of today's video.
Come on, man. Come on.
Check them out. And of course, hopefully they can offer some features that help you.
I don't see too much downward pressure playing out though. Like it's kind of at its like top, but don't know if it's going to go down this far. Might. I mean, it always seems easier to go down than up these days, but man, I'm just going to pretty much try and get out of this thing if I can at profit, even if it's $12.50. Hopefully I could get it to go up to 25 so I get a chance, but the fees are only going to be like $1.50, $2, so I'll still get $10 out of it. It won't even be negative after the fees.
We're told it's success.
with TechBud Solutions, a super quick stock market update based off.
All right, we're just doing a little bit of listening to what's going on in the stock market while we're trying to jockey our stop loss into profit right now. Almost there.
You must pay attention to. So tomorrow is the initial claims and the continuing claims report. For those that are unaware, initial claims are the people that are filing for unemployment for the first time. The expectation is 198,000 people filing for unemployment for the first time. If the initial claims comes in lower than expected, that is not a good thing, and let me explain why. Continued claims is just the number of people that continue to file for employment. So it's the same report, but it's just not their first time. So why is it that if less people file for unemployment, the market could sell off? On Friday is the most important report, and that's non-farm payrolls and the unemployment rate. So if we see that week after week, right? Well, this is capturing the weeks of March, but we're going to be reporting in the month of February, right? So now that the month of February is all complete, we're going to be reporting what the unemployment rate is. As we currently sit at 3.4%, the expectation is 3.4%. My opinion, and I think because I've been watching every unemployment report, there was not one initial claims or continuing claims report in February that came in higher than expected, meaning less people week after week are continuously filing for less unemployment, meaning that they're getting a job. And if they're getting a job, then unemployment should not be staying the same. It should actually be going down. And if we have a strong or stronger than expected labor market, the Federal Reserve can justify being more aggressive with future interest rate hikes, especially as inflation is looking to be a little bit more sticky. And this is why tomorrow is important, because if we see initial claims or continuing claims coming in lower than expected, meaning less people are actually filing for the unemployment, then that means that more people are actually getting jobs. And with more people getting jobs, then again, that overall unemployment rate should be going down. And now we're already tracking March, but the one that's going to be reported on Friday, 1 hour before the market opens, is going to be for the month of February. So again, tomorrow, 1 hour before the market opens at 8:30 a.m. Eastern time, the initial claims and continuing claims report is going to be released. I just wanted to make sure that you guys heard it here first about how the market can react when these reports are released. So if you ask yourself, why is the market so bearish, or why is the market so bullish during that pre-market session or right at market open, then now you know. You don't have to ask the why. You can then be like, okay, well, let me look at what the initial claims and continuing claims report came out to be and why the market is reacting the way that it is, right? That's going to make a little bit more sense because you understand the why. Today was a pretty sideways day, as you guys could hear, just based off of my voice and the congestion in my nose. I'm a little under the weather. I tried taking some nap. Rachel, who's my girl, is out of town for a meeting, and I'm watching Remy myself. So I had some dad duties today, and I've been all over the place. I don't necessarily feel the best, so I appreciate you guys putting up with me and allowing me to upload a little bit later today. So very excited for tomorrow. I plan to go live. Hopefully I feel a little bit better in the morning. I'm going to take a quick little NyQuil and head straight to bed. So I just put Remy to sleep. I just had dinner. And I'm ready to call it a day. So I appreciate your time. I hope that it earned your thumbs up. Please consider subscribing. I just wanted to make sure that I took the time and made you guys all aware of the initial claims and continuing claims report 1 hour before the market opens. So if you want to do anything with your position or position size prior to this report being released, then now you can, because you now know why and what can happen shortly after or before the market opens. So appreciate your time. Again, I'll see you tomorrow for our live trading session. And if you want to be able to watch me trade live as soon as tomorrow, that's going to be the second link down below. And again, don't forget, you get automatically entered for the GTR giveaway 5,000 times if you join right now, Learn Plan Profit 2.0, or you can head on over to shoptechbuds.com. And for every $1 you spend, it equals 5 automatic entries, and that's the 4th link in the description down below. If you have any questions, feel free to message me via Discord, and that's that 1st link in the description. And yes, I am using Webull, and that's that 5th link in the description down below. So pretty much everything is linked down in the description. If you're a little bit new to trading, then feel free to check that out, and then feel free to reach out if you have any questions. Like always, let's make sure that we end the year on our green note. Take it easy, team.
Hello, ladies and gentlemen, and welcome back. Today we discuss stocks, commodities, and cryptos and really deep dive into some of the key levels that we've seen this week. As you would have known in the previous video, we talked about being on the expected options weekly lows. This is where we expected a bounce, and it did occur. The question is, can it actually maintain it? We look deep diving into all of the markets right now, but more importantly, the big news ahead and what the Federal Reserve has said about this stuff. Let's talk about it right now. Well, welcome back everyone to the Daily Show. We've got the news, lead indicators, macro data, and of course, hottest charts coming your way throughout today's video. But let's begin with this. Bad economic data is bad. Good data is even worse. This is according to JP Morgan. If we scroll down, they've got some models to do with the forward funds rate, and they've basically modeled that the market is around 5% overpriced to their current expectations. I can tell you this looks very much like a liquidity chart. We saw kind of like injections from central banks around the world coming through in that January period. But since around 15th of Feb, we've realistically seen an incredible decline in basically the liquidity out there from central banks. Things are starting
Here we
to
go.
tighten and markets are starting
Getting
to suffer for
close.
it. Now, what about the idea of how high can we go? We know that 2023 is still around interest rates. What is the Fed's fund rate terminal going to be? People are now starting to price in 6% as a possibility. Now,
Bitcoin looks to be cooling off a little bit. No worries, though. We still hope to see a kind of a jump back up.
5.5%, you'll usually
There
break
does
something.
seem to be a
It's always
period
with the Fed,
of
we've got
fierce
charts on that level.
fighting after
On top of
Federal
that,
Reserve
until
news
inflation
comes
will
out.
stop
It doesn't
we will
seem
have
to
push
tumble in the
the
same
current Fed's fund rate
aggressive
above
manner.
the inflation number. So 6% is now the new expectation by many, but is it the expectation by the street? Follow @FX Evolution over on Twitter if you're interested in some of these charts. Links in the description down below. So what about the expectations of 50 basis points during the 22nd of March Fed meeting? Now, this meeting is super important to the markets, but more importantly, it's the news leading up to it that's more important. Jerome Powell's already told us that he is interested in the next 2 to 3 data points. One of those is coming up this Friday, and it's non-farm payrolls. If you think about 1 month ago, we literally were at a 9% expectation of a 50 basis point. Now we're at an 80% expectation. Look at the 1 week to 1 day ago. It's completely shifted over the last couple of sessions. We also posted some thought processes here last week around the idea that we believe that utilities, a pretty hated sector, might start to outperform the market. And guess what? It's not quite there, but on a 5-day rolling average of markets, we've got utilities second best, sandwiched in between technology and semiconductors. Was that the best one though in the last 24 hours? No, it was Semiconductors are in their own world. All they're doing is just constantly spamming AI everywhere. And yep, it's working out. This is clearly a disconnected market. It's just like any other disconnected market. If you had 3D printing back in whatever it was, 2013, marijuana stocks back a few years ago, and then of course we had hyper stocks as well. They're in their own world. If you're trying to short against those, we haven't seen strong signs just yet that semiconductors are weakening or that any AI stock other than Tesla is showing some weakness. How did utilities perform in the last kind of sessions? Well, did pretty well, just behind technology. It was one of the leading ones, which is again what you hope and expect to see. Let's talk about federal funds rates. Here's a chart that we usually bring up. Again, expectations have changed. The 8th of March and the 7th of March, we've seen that kind of rise. This is a big difference. And more importantly, the cuts that happen are slower. Look at this. We're all the way projected out to 2025. So it's going to be higher for longer. Look at the differences between the last couple of months. We've gone from being at 3% after the cuts to now being materially above 4% even after the cuts happen. Higher for longer, more pain for stocks, and more importantly, more pain for zombie companies, because we believe that this is one of the biggest issues that everyone is ignoring. There are so many businesses that make no money in the stock market and across the world, and they're going to have to, guess what, get new money funded at higher rates. How are they going to be able to pay for it? This will be, I believe, a storyline that will come out over the next 6 to 12 months. So we've used this chart plenty of times. We know that we're following the no recession path right now. We know the bonds market is telling us there is a recession coming due to the inverted yields. We can show you that on a chart, but if you're not sure of what inverted yields are, I'd suggest maybe watching the previous video that we put out. And then we also know there are a few concerns. We've got EPS growth basically turning negative. This is usually precursored bad things in the markets. Again, timing is everything here. And we also know that ERP is not being considered right now. So that's basically equity risk premium. Do we know that the cash-free rate is that actually being considered versus stocks? Stocks don't look as attractive as they did maybe in October of last year when they were trading at forward PEs, which remember forward PEs, better PE to use, that were underneath the median and mean. And that's very important. You know, where is the market trading? At the moment, it's trading around 18 times PE, maybe a little bit less than that. So the average is around 16.9. So if we have 16.9, we're trading at 18, we're slightly overvalued based on normal times in normal markets. So here we've got, of course, the Fed's book, and we know that they're starting to taper. They're continuing the taper. That's not changing. We don't want to fight the Fed, but we also need to be aware that, of course, markets will have these epic rallies in them. So we'll be talking about our short-term time frame thought processes later on in today's video. When the Fed tightens, it breaks stuff, guys. It always does. This time around, we've got the fastest tightening ever in history. So because we're tightening at a really fast rate and having to push it a little bit further than maybe the Fed initially expected, they've broken something. I guess it's zombies. Your guesses in the comments down below. I am reading them. I'm always interested in what you think. Now, when the Fed pivots tends to be a point where stocks crash more, usually around 1/3 to the 2/3 away through the pivot. What a pivot means is that the Federal Reserve stops hiking, starts holding it, and then starts to cut. Now, I don't expect these ones, but of course, the dot-com bubble, one thing about that was we came off really high PEs, we saw compression, and it took a long time. So we saw when the pivot to the bottom took 21 months. Now, some have been shorter than others. So I think in this case, it's going to be a bit of a blend between these. We've already taken off a lot of price on the markets, but if we do end up getting a recession, or at least that looks likely, markets usually will drop into the pivot. Remember, the Fed pivots because something broke in the system. They're trying to support that, and ultimately that leads to a compression in asset prices, which could be an opportunity because you should be optimistic on markets generally speaking. If you're not optimistic, then you will fail mostly long term, and you'll call like 5,000 ends up tops to markets and it will go bad for you. So you must be generally optimistic on economies, but I will give you one hint. If it's something to do with massive debt in housing, I would be a little bit more terrified. In this case, that's really only being shown in China. So just remember, at the moment, Western societies in general, although lots of debt, not necessarily toxic just yet. Smart money versus dumb money. How's everyone positioning? It turns out it's really neutral. Everyone has basically no opinion. This is a time where markets are showing incredible shifts. We're seeing economists have 42% spreads between the bulls and the bears of the economy for the year ahead. No one really knows, so you're having to focus on short-term timeframes and look for the signs to when you believe there's an edge in markets based purely on, of course, the metrics that we're seeing right now coming out. And the Federal Reserve, obviously pivoting will be a big component of that. If you're interested, we are doing a giveaway for the month of March. This is just to say a big thank you to everyone that's out there that's subscribed to the channel. Subscribe, fill in this form, and it's as simple as that. So just before we jump into the hottest charts, I wanted to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Here we are on the home screen of the application, and we're selecting the ability to customize our feed. Now, we don't want every bit of information out there. Sometimes we're interested in options, sometimes we're interested in the latest news, but we're not necessarily wanting to do with the academy or look at some of the hot themes. For me at the moment, it's all about options and obviously understanding the 0 day to expiry options. Some unusual flow that comes through could be interesting as well. So here we have the options screener. You can see we've selected this as now on. It wasn't on as default, and it shows us unusual short-term trades. Notice NVIDIA. So why could we be interested in things such as that options screener? Well, it's quite simple. With the advent and rise of 0 day to expiration options, you need something to be showing you these unusual flows. That can also help us to understand when markets need to actually hedge off those positions. And with the illiquidity we're seeing in markets, this is obviously having a big effect. If you're interested in Tiger Brokers and some of the special offers, check out the links in the description down below. And of course, if you're from the Australian audience out there, we've managed to hook you up with some additional Microsoft fractional shares. All you have to do, open an account with as little as 1 cent and grab those bonus offers. Thanks so much. Check them out today. All right, let's get into the charts and get into all of the key levels that we're watching right now. We'll start off here with the US 10-year. Now, I expect the US 10-year to start to show us weakness. It hasn't yet, but basically consider the US 10-year as dictated to by the market. If the market is actually starting to get scared, and this doesn't mean the stock market, this is more bonds. If the market's starting to get scared of the economy, we should see this dip off. At the same time, if that does dip, we should see TLT start to perform a little bit better, which is, of course, treasuries, long duration yields. I expect to do okay. And we also should see copper start to dive further. Now, I've been a bear on copper since up here. I've continued to maintain that status. I don't see a sign yet to show me that copper is going super bullish, but I would like to see copper turn over. If you're a bear in stock markets, you need copper to basically get flogged. And when it does, that's a good sign that bad things are coming. We also know that high yield bonds, although the stock market held up over the last 24 hours, high yield junk bonds did not. They actually fell further. If this makes a new low and the stock market's rallying off, yeah, that's not good, especially if utilities, staples, healthcare, those types of sectors are doing better than the rest of the market. So we're looking for those signs. At this stage, we know that high yield dropped. That's certainly not positive. What about what's going on dollar index? Well, as it turns out, a bit of a gap here. So you probably think that dollar index will want to cover that gap. But in general, we are at an absolute critical level for dollar index. We've moved into our supply. We've taken a new higher high past this high over here. And we now have new levels to be saying, okay, where does the trend actually end? Well, now we know that if these levels down here are broken, 104, kind of 14, etc.
Man,
over here,
still just riding here.
Daily level
Close to it.
Somewhere in here is where we expect buyers to resume.
I just feel it's going to have to go up. It just doesn't seem like the downward pressure is that great.
Time frame stats that we put out a few videos ago, if you want to check it out, they're kind of playing through. And I'm not seeing the flow in that you would expect for DXY pumps. So although the US dollar is on fire right now, and if it does breach this big white line here and close, I expect it to go back to 106.85. I could see this all part of kind of like what you call like a dead cat bounce. Now, we've been rallying this thing all the way, I would say completely neutral on it at this point, to even looking at short-term timeframe scalps. Non-farm payrolls is coming this Friday. I expect it to hold around these levels, waiting for that news. Remember, ahead of key news, we tend not to break zones. But when the news comes out,
Google Fi, a phone plan by
Now comes the waiting game.
this work?
Yeah, so very simply, any investor can go to masterworks.io, create an account, and invest in blue chip artworks. And historically, these are paintings that are multi-million-dollar paintings, which people haven't had the ability to invest in unless they have several $1 million to buy the painting.
And you buy the painting? Masterworks buys the painting?
We buy the painting, and then very similar to how a company goes public, we file the painting with the SEC.
You've done this with the Warhol.
We've done this with an Andy Warhol Maryland painting, which actually is available right now for investment. And then anyone can invest in that painting for $20 a share effectively.
How is a decision made if, in fact, this were to go up in value as to when to sell it? Or can I just simply, and how is a decision made as to how to market to market?
Yeah, so today we have annual appraisals that help investors understand how to think about valuation. In the future, we're launching trading markets. So very similar to a public company, you can trade shares in artworks. But today, the main liquidity plan is actually selling a painting. So as that painting increases in value 2, 3, 4 years from now, and we decide to sell it, that's when an investor would recognize the gain.
Gene, how did you get involved?
Well, it's pretty easy from our perspective. We invest in companies that are making radical changes, disrupting the status quo. And in this case, this has been the way art's traded for 2,000 years, just to the ultra wealthy. And we saw an opportunity to essentially be an investor and create a new asset class. That was one piece. No one's done this before. And the second big opportunity is just around Scott. He's had success in the past. I've known him for a long time, and those are the type of founders that we want to back.
It's a fairly large market, but I wonder, I remember there was an effort made, it still exists, to take sports players public a number of years ago. The SEC approved it. It went through all of that. But, it's harder to get sort of the brokerage firms of large platforms, perhaps, to adopt this so that you could offer it to your typical investor.
Yeah, I mean, when you look at the size of art as an asset class, it's a roughly $1.7 trillion asset class. That's a number that's published by Deloitte. This year, it's estimated that $68 billion in art will sell. And within that blue chip segment alone, it's outperformed the S&P by 180% since 2000. So it's this very interesting, outperforming, uncorrelated asset class that investors can use to diversify into.
Gene, isn't the best thing about investing in a painting getting to take it home and put it on your wall?
I wouldn't know because I don't know. I don't have that kind of money. I suspect that's a nice part of it. But Scott came up with a clever workaround that. They're tomorrow night launching a gallery. And so you can own a partial share in these and then take that trip to New York and go and visit your artwork at that gallery and see it live.
And can I short anything at some point?
Or is there a fund of them? Or it's just individual paintings?
Yeah, so today it's all individual paintings with painting-specific securities. Eventually, we're working to launch a fund, and there's no future market, so you really can't short anything today. But we think that's interesting long term.
We'll keep an eye on it. Where's the gallery?
497.
Make no mistake, you fight every word until you run. I don't think I'll have a word to say. You make me dizzy, dizzy. Ever around, breaking the sound. the spin that I know I can win, but I want to at least try. I'm still having flashbacks of you and I that night. Your words were so hypnotizing. Our connection was so enlightening. You've got me into the spin that I know I can win, but I want to at least try. Baby, you got me when you need me. Baby, you got me if you please me. Baby, you got me if you want me tonight. Baby, you got me if you tease me. Baby, you got me if you ease me into the zone that I need you tonight. Give it to me every day, morning. Give it to me when you hear me calling. I'll feel all your love, all your intrigue tonight. I'm still having flashbacks of you and I that night. Your words were so hypnotizing. Our connection was so enlightening. You've got me into the spin that I know I can win, but I want to at least try. Baby, you got me when you need me. Baby, you got me if you please me. Baby, you got me if you want me tonight. Baby, you got me if you tease me. Baby, you got me if you ease me into the zone that I need you tonight. Give it to me every day, morning. Give it to me when you hear me calling. I'll feel all your love, all your intrigue tonight.
All right, looks like we might finally be there for the 1, 2, 3, 4, 5, 6 times. 6 times. Let's get this stop loss set and hope it pops up. Boom. We're setting the stop loss regardless. All right, there we go. We got our alarm set, so just gonna play it by that. Might close it before the thing if it holds. We might move the stop loss up if it holds, but probably just gonna go back down. We're gonna be out of here with at least $10 profit. Oh, and there we go. It's executed. Nice. So far, $140 in profit for today. Until then, we'll have to see you next time.